in a truck accident, we're here to help you through it. It's more to us. It's personal.
So this is Eric Weekly. He is here today with TVFCU, and if you were in the market to buy a new house, he says come on over to them because the mortgage rates are looking really good.
They
good
are.
to see you.
Yeah, thank you for having me. Great
I'm
to be
glad
here.
to have you. You know, I kind of watch. We're not looking to buy or sell a home, but I have children who will be.
Right.
And it's been kind of encouraging to me, Eric, to see the housing prices stabilize a little bit. They don't seem to be so astronomical anymore.
Yeah, they started stabilizing about mid last year. There's still some pockets where we're seeing higher prices, but it's, limited inventory is for one thing. But yeah, now we're getting into that home buying season. Usually March, April, and May are like the big home buying season. So around here, so it's time to start looking.
Yeah.
And we're here to answer questions.
So you probably just heard Maddie's still here. She's just lying down on the floor. So if you hear some background noise, that's what it is. So let's talk a little bit about getting ready.
Yes.
For that, because some people have their financial situation ready to go. They're going to get approved. Some people need to perhaps kind of work towards getting some things ironed out. This is the time to come in and talk?
This is the time to come in and talk. Yes, the biggest thing is budget, budget, budget. We tell everybody that first and foremost. Figure out what your budget is, and then let us help you kind of hone that in to a specific home price, and we can walk you through all of the different products that we have, the FHA, VA, USDA, conventional loans, all of those. We will give you the options. We're not going to make a decision for you on what's best for you, but we're going to help guide you through that process.
Well, let's talk about that a little bit, because I'm going to go way back in time.
Okay.
My husband and I have been married 30 years, and I remember when we bought our first house, going with all these paper documents, pre-internet days, and sweating it. Can we afford it? Can we not? The rule then, I think, used to be that you wanted to make sure your mortgage was no more than, 30% of your gross income?
Yes, that's still pretty much a very close estimate. But again, it all depends on your financial situation. It could be if you have money saved for down payment. It could be overall credit score and your credit situation. There are a lot of factors that play into getting a mortgage in general, but what type of mortgage you get.
The credit score part of it, how long does it typically take to see a bump in your credit score, and what's a realistic bump?
It really depends on your credit profile. So if you've got installment loans and you've got credit cards, how much have you used on those credit cards? If you pay those down or pay them almost off, you could really see a bump in your credit score 60, 90, 120 days out, which would then allow you potentially to afford more of a home or get a better interest rate.
Installment loan versus a credit card. Is an installment loan better because at least there's an actual end date, as opposed to a credit card, which could be very lengthy to pay off?
In some cases, it depends on the need. Obviously, auto loans are considered installment loans because you have a set term, a set payment, and a set interest rate during that term. Sometimes you can do debt consolidation, or you could just get an installment loan to, do repairs around the house if you already own one, or whatever the need may be. But yes, you have an end term on there, but it's a variety of credit. It's having a mortgage at some point in time, having an installment loan or an auto loan, having a credit card. It's different types of credit that help build credit scores.
Okay, you mentioned kind of the different types of mortgages that you can get. It used to be that you just wanted to kind of go with a conventional loan. That was the tried and true standard. Is that still the case, or are people more willing to accept other types of loans? Right
now, consumers are willing to accept all types of loans, and we offer a huge suite of products. We pretty much offer everything that you can get. Conventional loans, meaning your standard 10 through 30-year fixed rates. ARM loans, which are your adjustable rate mortgages, where it's fixed for a short period of time, 5 years, 7 years, or even 10 years before it would adjust. But the interest rates are generally lower because you're taking a little bit more risk of it being higher later on. Construction loans, if you're looking to build a house, which we talked about last time I was here. And then we have our own portfolio type loans that we have developed. They're kind of odd terms, but it's for certain situations where you may not qualify for, say, a conventional 30-year fixed rate. There's also FHA, low down payment, 3.5%. VA, if you're a veteran, you can get up to 100% financing. And also USDA, which is your rural development loans that are in some of our outlying counties. We can get 100% there as well.
Okay, so on the ones that were, was it FHA? Was that the one? It was 3.5% versus how much? 10?
Typically on a conventional loan, minimum of 5, depending on credit and your overall loan or your credit portfolio or your credit in general. There's varying degrees to how much you have to put down.
And just kind of to break it down, Eric had said that the median price of a home right now, average price, is $350,000
Roughly in Chattanooga,
basically.
yes.
So you're looking at $15,000 to put down,
In some cases, yeah.
before you can buy that house.
Right.
So that kind of lets you know what your benchmark needs to be. So if you're looking to make that your goal, maybe get some things paid off, or maybe your credit's good. Don't try to get those things paid off so quickly, and instead save your money.
It's really a balancing act when it comes to credit. It really is. There's no science behind it. There's no way we can sit here and figure it all out in a show like this, or you know, in the 20-something years that I've been doing this.
But that's what you're there for.
It's still a mystery, yes. But we have the experts that will help walk you through all of this once you talk to us.
I know that y'all are really great about making a lot of this available to people online.
We do, yes.
But if people want to just sit across the desk, can they still do that and talk?
We can. We have 29 branches across our 17-county footprint. A lot of it is now digital, too, so you can sit there and talk to me like on a screen, just like we're talking now.
Okay.
You can do it from your home. You can do it online. There's multiple ways we can help.
Well, here is where you can go to begin the whole process. Either the branch nearest you, just pull in and walk in, or go to tvfcu.com and find the branch that's closest to you, or just from the comfort of your own home, get that digital conversation going, and they'd love to see you be in the home of your dreams.
Yes.
Thanks, Eric.
Thank you.
If a pipe bursts in your house, you're calling a plumber, right? If the check engine light in your car stays on, you're calling a mechanic. You know when it's time to call in a pro. Why should it be any different after a car crash? Call Gary Massey Injury Lawyers. For years, they've been